Now, let's say you're an inexperienced day trader, someone interested in wanting to trade the future markets, whether that's the NASDAQ, the ES, S&P 500, a currency market, a commodity like gold, whatever it may be that you have interest in starting out with. Let me tell you this: you're going to need a master market structure, okay? Because it is everything. It's game changing. Why is that? Because you're going to need to be able to understand which way to trade. You just can't jump onto the charts and start trading. I see a lot of people just chasing the markets every time it pulls back to a key level. They want to get into a trade and they're trading against the grain. So that means they're, taking bearish setups against a bullish market. Please, guys, stop doing that. Learn and understand market structure. That's why I made a very detailed video for the elite channel supporter group. Okay, and if you're interested in becoming part of that program or that private community, the link is down in the description portion of the video. It's very inexpensive. It's only $6.99 a month. That's all it is. You break that down, that's basically like 25 cents a day. Okay, that could be game changing to anyone out there who's really looking for a strategy in which they can learn how to trade the future markets the correct way. All right. I can't guarantee anything because everybody is different. Some people are disciplined. Some people aren't. Some people, they understand how to restructure. Some may never get to it. But that's the reason why I've made that video, which is part of that private community. Not only do you get that, but you also get the video playlist and a ton of videos packed with essential and quality information surrounding trade setups that I take. Same trades that I post over on our Discord community. So if you're interested in joining the Discord, the link is down below. Strategy is important. Trust me when I say that. Trading plans are important, but market structure is the key to putting you into the driver's seat in which you can trade year-round and make money. Let's say you have a goal of making $100 a day. Can you do that? Yes, you can. You can simply scalp the NASDAQ for 10 points at a time. And, whether it's one contract, two contracts, and I'm talking about the E-minis. The micros, you really will have to put a little bit more work in or trade larger lot sizes. But still, you can make several $100s a day trading the future markets and make a good living. Okay, I'm telling you that. Now, maybe some of you say, hey, I have experience. I just wanted to join the ride and watch the video content and maybe pick up learn a new strategy. What I talk about is multi-chart confluence. All you're doing is marking up zones of starting off with a chart that has it's a higher base chart. Okay, they give you a higher base confluence level. Okay, and then moving down and scaling down to a lower base chart or your entry chart to look for basically a zone within that larger zone that you marked up to start with. Okay, so I know the last few days have been kind of like, I say iffy. They've been kind of hard to find quality setups. Maybe some of you taking good setups and have done well, but you can definitely find opportunity. I'm going to tell you that now. When the market is not really putting out, maybe you say, hey, I'm trading for like me, the 120 range chart, or maybe you're trading a 60-minute chart coupled with a 5-minute chart. I'm using a 120 range and a 24 range chart to make my entry points most times. Now, when the market gets a little, let's say, sketchy, but a little bit tight to where it's a little bit more difficult to trade, then you can start using maybe a middle ground chart, like maybe the 60 range chart when it comes to the NASDAQ. So the 120, 60, and 24. A lot of times, in these market conditions, and you have to understand that the conditions change, okay? The markets are not going to move the same at all times. Sometimes they're moving better, sometimes they're not, okay? But when the market is not pulling back to, say, 120 range demand zone off my higher base chart, I'll look for opportunities off my 60 and then scale down to a 24 range chart to take my entries off of. I'm going to show you an opportunity, like two of them. Well, I'm going to show you some opportunities, okay? Just using the 60 and say the 24 range, okay? People ask me that, well, what if the market doesn't tap into or pull back to a higher base chart zone or level? Well, we can move down to something a little bit slightly lower and look for opportunity that way. Now, before we jump right into this, I want to say I will be breaking the trades that I took today down for the elite channel supporter group. So if you're part of that community, you'll have access to that sometime today when I drop that video. If you're not and you're interested in receiving, again, all the trade breakdown videos, the video playlist, and that great video that I covered on market structure, scroll down to the description portion of the video, and you'll find that link where it says Elite Channel Supporter. Click on it. If you're interested in joining, again, it's only pennies on the dollar a day. It's $6.99 a month. That's going to give you direct access to it. Make sure to choose the second tier for $6.99. Now, as you can see, the market's been ramping to the upside, right? Making higher highs and higher lows. And when the market opened up yesterday evening into the London session, we just started kind of pushing our way down, right? Making lower lows and lower highs. So where we were once bullish and now become bearish, I'm only looking for opportunities to do what? Go short. As long as the market is continuously breaking areas of structure to the downside, then we should be looking for key areas where the market can pull back to. So when it pushed down here, pulled back and broke lower right here, well, it started breaking structure below this area, below this area, below this area. So when we're taking out and making lower lows and lower highs to the downside and taking out structure to the left, primarily, major areas of structure coming back down to the downside, then we should be looking for, again, pullbacks to go short, right? So when the market made this low right here and pulled back and broke lower, I was looking for it to come up, after it broke here, come back up to this area here on my 120. It never did. It just kept flushing to the downside. I said, okay. So after about 10 o'clock today, I said, let me look for something because the market is really not pulling back to any key area after, forming an area of supply to the downside. So when we're bearish, you're looking for supply setups. When you're bullish, you're looking for demand setups, okay? So when the market pushed down right here and pulled back and then broke lower right here, I saw where it pulled back. There is a demand zone here, but it's low probability on the 120. If I scroll down to my 60 range, you'll see where it is a demand, not demand. If I said demand, guys, I'm so sorry, supply. Supply zone rests right here, aggressive selling, all right? And aggressive selling here on the 60 range. Now, on the 60 range, this is a high probability supply area right here. High probability, okay? Then that's why I just moved down to my lower base chart and I'm looking for the opportunity to get into the trade. So like, let's say for example, I'm just going to show you a quick example here in which we would use the 120 to go long off of a key area of demand. Say, for example, the market was pushing higher here. This is from March 24th. We got an aggressive area buying right here. Demand zone pulls back to the demand area that I marked up on my 120. That's when I'm going to move down to my lower base chart, my 24 range chart, to try to find an entry to go long, right? So I marked the 120, okay? Let's go down to and scroll over to the 24th. Let's find that entry point right quick if we can. Let me find out what day this was. That was the 20. So it's a little further back here. This is the 24th. What time was that trade right there? That was at 10:12, somewhere around there. Okay, so right here. So the bigger box, the 120 blue box, that's the 120 range demand zone off of this area right here. The yellow box is where I scale down and I'm looking for a zone on the inside of the larger 120 demand zone. That's a demand zone where it broke structure right here. Pulls back to this key area of demand right here. Get the rejection, you can go long, okay? As simple as that. Your stop loss, again, people always ask me, wherever the rejection takes place at the 24 range zone you mark up, once you get the break and close of the candle, or you can go in aggressive here at 20,280. Your stop loss is going to go on the back end here at 20,274 or 275. Give yourself 2 or 3, 4 points breathing room right there because they love to push up and come back and test those buyers right here. Anyone that bought to see if they can stop you out. You become liquidity at that point. So again, stop loss, give yourself a few points. Don't put it tick to tick. And then, you're aiming for some area above where gaps need to be filled on candles going back to the upside and possibly take out some liquidity. But at least back up to this area here, I would say, well, let's see. Yeah, to this area here at 20,088. So if you got in here at 20,280, maybe you pick yourself up 8 points there. Or if you look at the higher base chart, you can do that as well. You can see the rejection took place right here. Maybe you're aiming for up here at 306, and the market does run up there and hits that 306 area. Why? Because this was the pullback back to the zones, and this is going to be the high right here where it's going to test that. Now, let's say for example, as I was saying earlier, we don't see an opportunity to where, the market's pulling back to any key area of and you're looking for maybe a setup to where you can, say for example, go long because we're bullish to the upside, but the market really isn't pulling back to any key area of demand on the higher base chart. You can move down to a lower base chart, like right here, the market pushed up, pulled back. We got some aggressive buying to the upside on the 60 range chart, and then it pulled back and tapped the demand zone on the 60 range, right? So when that happens, and this isn't a, really a let's see where we're at right here. You can't really see much going on there, like a demand area here, all right? But if we go down to the lower base chart, we can look for an opportunity for a quick scalp, even though we don't have a 120 range demand zone. This is a 60 range demand zone, so we can kind of find intermediate plays or trades when we scale down to a slightly lower base chart and still use our entry chart, okay? So a 60 range chart here, breaks to the upside, aggressive buying on the 60 range. So this is what it looks like on the 24 coming back to that zone. It taps the pink magenta box in this area coming down, and we want to find an aggressive area of buy-in, okay, or demand zone within the 60 range zone. That's that yellow box right there, or that yellow outline box right there. Aggressive area, high probability zone. We got a break of structure above this area here at 20,350 or 349. It taps it. We get the rejection. Again, stop is going to go on the back end here at 20,328. Give yourself a few points breathing room. Maybe down here at 326 or 325. Take it on up to this area right here. Okay, why? This is a supply area. So maybe you get into the trade right here at 334, a little bit aggressive, and take it on up here to 344. Pick yourself up 10 points. This is what I'm talking about by taking two 10-point scalps on the NASDAQ will put you, well over, say, for example, well, let's just do the math on it right quick. Let's just do the math. Let's say you're trading one NASDAQ contract, okay? All right, and that's the E-mini. So 10 points, there's 4 ticks in every point. That's going to give you 40 ticks. Times $5 a tick value for each tick, okay, that's $200. So you do that twice on a 10-point pickup, that's going to give you $400 on the day for those two. Now, let's say you trade in, 2 contracts, right? Okay, 10 points times 4 times 5 times 2 contracts. It's going to give you $400 on that one trade right there. All right, you do that 2 times on 2 10-point moves, and that's going to give you $800 on the day, each and every day, all year round. Okay, so maybe you can't find any setups. All right, so maybe you say 3 days out of the week. That's still a nice, pretty penny. So if you trade, say, 3 days a week, that's and $400, that's going to give you $1,200 extra each week, and that you can put away in savings or whatever you need the money for. Or let's say you did that twice on trading 2 contracts, that's going to be $800. 3 days, that's $2,400. So you double the amount, right? So $2,400 additional extra a week, guys, and do the math on that times 4. Okay, 4 weeks in a month. All right, and that's only trading 3 days a week. So just imagine how well you can do trading just a few days a week. Just looking for opportunities. You don't have to trade every single day, and don't force it if there's nothing there. But I'm here to show you that even when the market is not pulling back to your higher base zone, and what you use to really, like for me, I'm using the 120, and it's not pulling back to any key levels or key zones like a demand area or a supply area. But then I can scale down a little bit, look at maybe at a 60, something in between the 120 and the 24. So maybe I pull up a 60. I can still trade using my 24 range chart, entry chart, but just by scaling down a little bit lower to maybe a 60, in which I can find something off a supply or a demand setup. In this case here, demand setup. Another beautiful demand setup that formed on a 60. Right after this one, it pushed up, pulled back, aggressive buying, break to the upside right here, comes back. There's a pink box right there. That's a demand area on the 60 range chart, okay? I look on the 24 range chart. I'm scaled down to now. Aggressive buying, break a structure above this area here at 20,360. It pulls back to the demand zone right here, all right? You can see it right there. And from there, the market pushes to the upside and tests its higher area slightly. So still a nice trade setup back to back on the 60 and the 24. Just showing you an example. All right, so the market pulls back again. We got some buying to the upside here. Breaks here, small area where the aggressive buying comes out on the 60 range. If I scale down to my 24 range chart, I would use the 12 range if I was trading the ES. on the 24 range, we're making higher highs and higher lows, breaking structure right here, pulling back. Let me mark the zone up because I didn't do so on the 60 range. So we'll mark it right here. Okay. Let's put that in magenta. We'll outline that box and place it on all charts so we can see it on a 24 range chart now. And as you see here, it pulls back to the demand zone right here on the 24, right here, okay? And then once we get, it taps it, we got aggressive buying here, breaking structure on the 24, close, aggressive here, going aggressive at 362, and then you aim for the highs back up here, as you can see, back up in this area here on the 24 range, okay? Because the market came down, pulled back, broke lower, okay? And then on this pullback right here, it tapped, this area, small area of supply here on the 24 before coming down and tapping the demand zone. So it's going to go back and probably take this area here out, at least run this top area of liquidity right here and test the highs right there. And it did. So you got 1, 2, 3 back-to-back trades, all with demand setups from the 60 and the 24 range chart. So I just wanted to show you that you can still do this even when, okay, you say, hey, the market's not pulling back to a higher base chart, or the market is really not showing me any key area or zones that I can trade from. It's just pushing higher without pulling back to a higher base zone, okay? Then you could try to trade the middle level, okay, maybe use a slightly lower base chart, but still trading in the direction of the higher base chart. Because look, on the 120, we're still bullish to the upside, okay? We're still making higher highs and higher lows, so we're making new highs as we continue pushing higher. It wasn't until today that we actually started to shift and push to the downside, okay? So I just want to share that with you guys. It is definitely possible to make money using this strategy. If you spend time, I'm telling you, back testing and forward testing, you will see that it actually works, and you can scalp and make a living by doing this all year round, looking for these same type of setups. Now, again, if you're interested and you're receiving the trade breakdowns, the video playlist, and that video that I covered on market structure, which is all, I'm telling you, it's worth it. And you don't have to hear it from me. You can ask people over in the Discord community, and I'm sure they'll probably attest to it as well. But anyways, again, the link is down in the description portion of the video. Now, if you're not a subscriber to the channel, please take the time to go ahead and sub by clicking the subscribe button right now. Make sure to turn your post notifications on so you do not miss any of the uploaded content that I pretty much drop or post on a daily basis. And if you do me the biggest favor before you click off the video, click that like button, that thumbs up button for me. Show me some gratitude for making it all this video content, because it is my goal to really want to inspire people who are interested in trading. So I provide so much valuable information for free, and all I ask in return is for you to click that like button for me so we can keep this channel growing. Take care. I'll see everyone in the next video.